Brace for impact. That's the warning from the Reserve Bank this morning, with more interest rate hikes on the way. And right now, speculation is mounting on what the rise will mean for the property market, family budgets and the economy. And for his take, let's bring in Mark Bouris. You know him, you love him, Executive Chairman of Yellow Brick Road Home Loans. Mark, we were expecting an interest rate hike, but were you expecting 0.5%?
I think that was a shock to the marketplace. 0.5 is probably 20% more than all the economists that I interviewed, that I spoke to, that I did research on, expected. So they expected somewhere between 0.25 and 0.4, but 0.5, that's a real signal.
Yes, it feels like they had their foot on the accelerator and all of a sudden just slammed on the brakes. Is the market going to be in a bit of shock, do you think?
I think the market is in a bit of a shock. It's going to be interesting to see how the banks pass that on today and tomorrow.
Well, Westpac passed it on in full already, didn't they?
We want to see if everybody does it and see if someone wants to try and get a bit of market share. But my guess is everybody's going to pass 0.5 on because they're going to take advantage of increasing their margins as lenders. So I expect that this is going to have a big impact on prices and it's going to have a big impact on the cost of living.
Is there any wiggle room for anybody who has a mortgage? Can they shop around, or, you know, what can you do when you're stuck like that?
It was interesting. I saw at the beginning of the segment that you talked about rate rises having a $200 a month impact on a $600,000 loan. But I went and did some research and I can see lenders out there, if you have a loan with those particular lenders, it's only going to have $160 a month impact on you. So the bottom line is shop around, find the best rate you can.
Yeah, well worth it. What about people, you know, there's so many people who've been waiting for years and saving, trying to get into the market. If you are in that position where you've almost prepared yourself to get in, what should you do?
Wait.
Right.
Don't panic. The bottom line is the predictions which have been hitting us around what interest rate rises we're going to see have come true. The other prediction that's been hitting the market is that house prices, on average, will reduce from somewhere between 10 and 15%. So that means if you're worried about higher repayments every month as a new borrower, then it may be a possibility you're going to buy at a much better price in the next 6 months. So just wait, don't panic.
It's been a while since we've been in a situation like this, hasn't it? It feels like a real shock, where we used to take these blows more regularly. Let's talk about small business, because there's a sort of a perfect economic storm coming at everybody. You're a great advocate for small business owners. How is this rates decision going to flow onto them? How it will affect them? Well,
of course, small businesses borrow money, like everybody. A lot of them have home loans, but a lot of them have loans to run their businesses, and they've already been paying much higher interest rates. So small businesses will be feeling the effect of a slowing economy. So from my point of view, as an advocate for small businesses, I'd be saying to small businesses right now, make sure you cut your costs, control your costs, and start to do all those things that make your business far more efficient and rely less on wages and less on rents and less on other types of costs that are normal within running your business. So be careful about your cost structure.
Yeah, well, they've tightened their belts for the pandemic already, but here we go again. Thank you for coming on the show. We could talk about it all morning. Thanks, Mark.